Good afternoon. Let's do some business. We are doing it live right now. You're live on the air at 4 o'clock. We get right down to business with the news-driven hour after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Motec on Money, live on the air right here, 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Motec on Money podcast, kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Well, stocks did finish higher today with tech names taking the spotlight today. The NASDAQ hit a record high, the seventh all-time closing high this year. Now we're awaiting the latest reading on inflation that's coming out first thing tomorrow morning. The Consumer Price Index, which might provide some more clues as to what the Fed might do on interest rates. We saw the NASDAQ moving up by 123 points to settle at a record high 16,511 today. The S&P 500 moved to 25. And the Dow moved up 127 points. All the major averages still hovering near their all-time highs. Tomorrow morning, ahead of the opening bell, we'll be getting the Consumer Price Index. Economists polled by the Wall Street Journal expect the annual headline CPI rate for the month of April will come in at 3.4%. That, of course, is hotter than what the Fed wants. Core CPI, which strips out food and energy, is expected to slow to a 3.6% annual reading from 3.8 in March, so a lot riding on tomorrow's reading. Fed Chairman Jerome Powell making some comments today suggesting September is now the month that the Fed is considering for the first interest rate cut. According to at least one prominent analyst, Powell made repeated references to being patient and that it might take longer than previously thought to have the confidence to cut rates. Nervous time in the Middle East. Oil futures, meanwhile, settling at a 9-week low today as the Organization of Petroleum Exporting Countries, also known as OPEC, left its monthly forecast largely unchanged. We saw the price of Brent crude in London, that's the global benchmark, down nearly $1 today to 82 and change, and West Texas Intermediate in New York down $1.10 to 78.02 a barrel. Even though oil prices are coming down, Californians can expect higher gas prices to the tune of about 50 cents a gallon higher over the next couple of years because of what's now being called a secret tax increase, according to one of the taxpayer advocates in Sacramento, namely Republican State Senator Janet Nguyen, and she'll be joining me live later this afternoon. On commercial real estate, a lot going on, still a sore spot for many banks and the overall economy, largely due to the slow return to the office following the pandemic days. And did you hear about this? There's a big for sale sign up at the so-called Graffiti Towers in downtown Los Angeles. We'll get the very latest on what's happening on the commercial real estate scene this afternoon with Jerry Sullivan, National Managing Editor of the authoritative commercial real estate site, The Real Deal. But first, on your money, the markets, the economy, and the whole works now. Joining us live now, Paul Dietrich, Chief Investment Strategist at B. Riley Wealth Management. On a record-shattering day today here, Paul, for the tech names and all the other averages pretty close to their record highs. Give us your view of this latest rally here today.
Well, it's kind of bad news is good news these days. We had a lot of volatility today. At midday, all of the indexes were actually negative for a while, and then, they closed at highs. And you wouldn't have thought that that would happen because we had the wholesale price, the PPI report come in today, which showed now 3 months of inflation gains and bigger than expected gains that economists had predicted. So inflation, now all three of the major inflation government reports have been up for 2 to 3 months. And they continue to exceed expectations. Tomorrow's the big one with the CPI. When Jerome Powell talked today, he did say that he hadn't completely changed his mind. He didn't say he was going to raise rates in September, but he did say that he thought that there could be a cut, and he kind of indicated that there would probably only be one cut this year, but he said given the inflation going up, he didn't have a lot of confidence in that. And there's probably about the a kind of a slight majority of the economists believe that there'll be one cut sometime this year. I doubt, because of the election, it's going to be in September. If we do have one, it'll be in November, right after the elections. But there's another group that believes there won't be any cuts this year, and the first cut will be in 2025. And now there's a fairly substantial group of people who believe that we may have to increase rates, especially if the CPI comes in strong tomorrow, and then we have higher inflation readings. And if you're looking at things like gas prices and all sorts of other things, it's hard to see inflation coming down.
On the air live with Paul Dietrich, Chief Investment Strategist at B. Riley Wealth Management, based here in Southern California. You're right, that producer price index, the measurement of inflation at the wholesale level, did rise significantly higher than what analysts were expecting, a 0.5% increase compared with the 0.2% the folks at the Wall Street Journal and Dow Jones were expecting. What kind of reading do you think we'll be getting tomorrow? What kind of market reaction might we see there?
Well, if it's higher than expected, the market should go down. But given what we've seen lately, that all the bad news coming in, there was no good news today on the economy, and yet the market was up. So this is a market that's completely disconnected from economic fundamentals and the fundamentals of the stocks that are, underlying, say, the S&P and the NASDAQ. So nothing would surprise me. But this always happens in bubbles. It happened right before the dot-com crash and right before the 2008, 2009 Great Recession. I think we're seeing, we're obviously in a bubble now. You can tell that with all these crazy meme stocks and trading by kids who have more money than they have sense. And so this is just something typical that happens right before a bubble collapses, and that's what we're in, is a bubble.
All right, so, or another way to explain maybe the market climbing that proverbial wall of worry, and certainly a lot of things to worry about, as you've expertly laid out many times on this program here. So, but you're right, the meme stocks have suddenly come to life, names like GameStop and AMC, which became popular during the Reddit rally days. And what about this mania that we're seeing here? And obviously a lot of folks learned a hard lesson back in those days when those stocks had that big run up, and then of course the big pullback that we saw after that.
Yeah, the trading here is completely disconnected to any economic fundamentals. When we saw the big run up, when it was getting up, GameStop was getting up to about $300 and some odd dollars. I had done an analysis of the company, and I had figured out, and my analysis was not wildly different than most other serious economists and analysts, is I figured that the stock was worth about $6.50 a share. And these kids, because they basically got together on the website Reddit, they wanted to kind of, I don't know how to put this any more politely, but to screw all the short sellers who were shorting the stock because it was so overvalued. And what they came in and they just bought it, not because there was any value over $6.50 a share, but just for the fun of it to, hurt the short sellers. And they ran the stock up to about $300. It, of course, crashed thereafter. The same thing's going to happen here. They're just putting pressure on the short sellers. I mean, this is a fun time. I guess these people, don't date girls because they don't have anything better to do to have fun. And it's just, it makes no sense. They're going to lose a lot of money. And, again, it's lots of kids. It's mainly, young 20-something-year-olds who are doing this. They have a lot more money than they have common sense.
Well, that's why we have you, and we got to lay it out on the line. There's certainly a lot of risk involved with these names, so thanks for flagging that. And in the meantime, the Magnificent Seven roaring back to life as well. NVIDIA leading the charge here. For a while there, they had gone dormant, right? But now back in focus as well as the NASDAQ hits a record high today. Any thoughts on the Magnificent One, NVIDIA, and the rest of the Magnificent Seven?
I mean, NVIDIA is a great stock. It's a great company. But when you look at it out there, and it produces a chip that is particularly used in AI, in artificial intelligence. But now there are a lot of companies like Intel and ARM and all of these other chip-making companies that are basically coming up with competing products. It's not like they don't know how to do this. It's just that NVIDIA was first. NVIDIA kind of focused on this before, let's be honest, 6-8 months ago, no one had ever paid much attention to artificial intelligence in the general public. Now it's become, the hot bubble of the day, but there's going to be a lot of competition. Once there is a lot of competition, what happens? Chip prices will go down, earnings will go down, and artificial intelligence is going to be very important, and it's going to continue and do well. It's just going to be paying less for its chips, and so I think NVIDIA is extremely overvalued at the moment. And if you look at it on anything on a 3 to 5 year basis, it's going to be a company you're going to want to hold. It's just you're going to want to hold it for a cheaper price than what it's going for right now.
All right. Ahead of the big inflation number, we see gold moving a bit higher today here. What about gold here?
I have in my portfolios over 20% of my portfolios are in gold, and they have done exceedingly well last year and this year with gold prices reaching kind of record highs. I ran
The Bigger Pockets portfolio of podcasts are worthy of your investment.
We're having a real conversation as real estate investors.
New episodes available every day.
It's important to buy where it makes money and not necessarily where you want to travel to.
Bigger Pockets, On the Market, Rookie Real Estate, or Money Podcast.
The purpose of flipping is to create more cash so then you can reinvest into other types of properties.
The Bigger Pockets Podcast on YouTube or wherever you listen.
Gold fund for 10 years, a mutual fund, and I know a fair amount about investing in gold. To be honest, I've never thought that gold was the greatest investment as an investment in the world. But what it is, and how I think investors ought to look at it, is as an insurance policy. When everything is going to hell in a handbasket in the markets, during a recession or a Lehman Brothers moment, a crash in the stock market, it does its job, and it goes up kind of exponentially, and it'll save your portfolio if you have a certain amount invested in gold. And that's what I've done in each one of the last 2 recessions. And it's been very, very beneficial. You're also seeing, because of our debt and deficit spending, we have a Congress who's like spending money like drunken sailors. I should say both Democrats and Republicans, because you can't get it through without both houses. And we are racking up such historic amounts of new money that we're printing in order to pay for our bills, that a lot of people around the world are getting nervous about the U.S. dollar. Even though it's strong, you're seeing this with central banks, when central banks would have normally been buying up U.S. dollars or treasuries, we're seeing record buying of gold from central banks, and that's really driving the price these days, is the fear that the dollar is going to be worth a lot less in the future because of increased inflation. This is the judgment of all the central banks in the rest of the world, is that they don't want a depreciating currency as their backup, and so they're buying gold.
And we see gold off its recent all-time high, which was up around 2,448, I believe, over the past couple of months. Right now, it's trading at around 2,362. Want to get your comments on crypto. We talked to the biggest fans as well as the harshest critics. Some people think it's digital gold. Others think it's rat poison. Paul Dietrich, why don't you weigh in on what you're seeing happening with Bitcoin and the other cryptos? Bitcoin, of course, also had hit a record high just in the last month or so.
Yeah, again, right before every recession, we saw this in the dot-com bubble in 2000 and 2001. We saw it in 2008 and 2009. We had all of these crazy new products, the mortgage-backed securities, and every time we go into a bubble before a major downturn, we see excesses in the market, stuff that everyone knows is just insane, like these meme stock things that are happening right now. Crypto is another one of those. I have no doubt that the blockchain and some of the things that are associated with crypto, but don't necessarily require crypto for blockchains, that they're going to be useful on all sorts of financial tech. And our strawberries coming from, say, Chile, you can track on the blockchain where they are and what the temperature of the whatever conveyance method they're using is. So, and you don't need crypto for that.
Well, that's a new use that I've not heard of, so we'll add that to the tally.
Yeah, but crypto, there's no there. I mean, it doesn't have any value in and of itself. It's an algorithm with zeros and ones, and most people talk about it as the greater fool theory, is that if you can get someone to pay for your Bitcoin more than you pay for it, you know who the greater fool is. If you're paying more for it than the guy who's selling it to you, you know who the greater fool is too. There's no real value, and most people think the great value is the government can't track it. Well, we know that's wrong. The government constantly tracks it. They confiscate it. We see this all the time with people who are using it for illegal methods.
That's an important point. And before I let you off the hook here, Paul Dietrich, any specific places where you are putting money now and/or taking it off the table?
Well, in my newest market commentary, I talked about, people ask me all the time, what were the best investments and what were the stocks that did best during the 2008-2009 recession. And you got to remember, the S&P 500 peak to bottom went down 57%, and NASDAQ was down almost 80% during that period of time. So people are starting to think, well, how do I reposition my portfolios to do well during those recessions? And I keep telling them that only 10 stocks were up during that period of time. 10 stocks. That's 2% of the S&P 500. Trying to bet that you're going to get the right two stocks is pretty hard. But I can tell you, looking at those companies that do well generally in recessions, which are healthcare, utilities, those sort of things, they really do well. and you can think about it. Also, fast foods, they do well. McDonald's, Walmart, Costco. But I really think that people ought to try to stay away from that. And I've got most of my clients in short-term Treasury bonds. They'll be paying about 5% in the 2 to 5 year range. Gold, cash, even though there's inflation and there's going to be inflation, cash is probably going to outperform 99% of all the stocks in the S&P and NASDAQ. But Dollar Tree, those types of things that do well, that people go to during recessions, those are the stocks that, at least if they don't make any money, which most of them won't, even McDonald's was down a couple of percent in 2008 and 2009, they won't go down as much as the 57% or 80% of NASDAQ. People look back, you can see Apple and all of the big tech stocks of what they did, and it wasn't pretty during that period.
Paul, thank you very much for that thorough analysis, and we always appreciate having you on here. That is Paul Dietrich, Chief Investment Strategist at B. Riley Wealth Management, live this afternoon. Folks, let's be honest. Sometimes we find ourselves or loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became an attorney to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is hit dial. Believe me, you'll feel a lot better having set this up for yourself and your family. 833-88-SHARK's the number, 833-88-SHARK. With the population exploding and increased vehicles on the freeways, be proactive, prepare for the worst, and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. Here comes James Taylor coming to the Hollywood Bowl on May 29th. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-795-2222. Moteca Money continues here, 790 KABC. Winning day for the stock market. The NASDAQ is settled at a record high close, up 123 points at 16,511. The Dow 127 and the S&P 500 of 25, all the major averages at or near record highs. Bitcoin moving higher today at 156 at 61,709. Ethereum down 3 at 2,888.
Named one of the best personal finance podcasts, The Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
Let's hear another success story. This one comes to us from Stacker Derek.
You guys are the best, and it's because of you I now understand retirement accounts, money in general, and how poorly the guests are treated when they show up. I really don't know where I would be without you. Thank you for $1,500, and here's to another $1,500 if Doug can survive that long without pay.
Find out more by searching the Stacking Benjamins podcast wherever you listen.
Doge now at 15 cents. Moteca Money continues here at 790 KABC. Good afternoon. For sale, 3 partially built skyscrapers, graffiti included, in downtown Los Angeles. Yep, so-called graffiti towers now up for sale on commercial real estate. A lot going on in downtown Los Angeles. Commercial real estate overall still a sore spot for many banks in the overall economy, largely due to the slow return to the office following the pandemic days. Let's bring in the expert now, Jerry Sullivan, National Managing Editor of The Real Deal, the authoritative commercial real estate website. Jerry, of course, knows Southern California quite well as the former editor of the Southern California, the Los Angeles Business Journal, as well as the Orange County Business Journal. Jerry, it's great to have you with us here, and welcome back to Southern California Airwaves here today.
Good to be back, Frank. How are you doing?
All right. Very good. And big story there in downtown Los Angeles. You and I have been talking about this place for years now, since the construction stopped, and the Oceanwide Holdings project, that billion-dollar project right there in the heart of downtown Los Angeles, across from what's now a Crypto.com Arena, formerly Staples Center. eyesore there with all the graffiti on it now up for sale. Tell us about the news about all that there.
Well, the latest, our bureau chief in Los Angeles, Bella Farr, broke the story today that BH Real Estate has extended a $10 million loan, which is about enough to cover carrying costs on this property for the developer, who's based in China and pretty much broke at this point. So the loan was extended so they could meet their carrying costs for the next 3 months or so. Meanwhile, they have it on the market. I think Mark Tarczynski at Colliers is brokering the property, and I'm not sure what price they're seeking. There's all kinds of numbers connected to this. They owe $400 million outstanding right now. They've got about $1.2 billion sunk into this property, which isn't finished, and may take another $1 billion to get done. So, take your pick of the numbers, but there's a lot going on. The latest, as Bella reported with the breaking story today, is the $10 million loan that will at least get it through the next several months.
And that is all on the Real Deal, your great site for commercial real estate information. On the Air Live with Jerry Sullivan, the national managing editor of The Real Deal. And, with a place like that exposed to the elements for so many years, an unfinished project like this, some of the experts have told me that the whole thing may have to be torn down. Is that what you're hearing as well?
Yeah, I think it's a big question mark, and whoever might be interested in buying it probably ought to price it as such, because you can't, you don't just leave a 3/4 of the way finished 3-story towers, exposed for several years and expect to pick it right back up on construction. So, that remains to be seen. But I think what it all points to is a real cautious buyer who's going to have to buy right.
And it looks like, according to the article quoting some of the folks you mentioned at this brokerage, that they're trying to get this deal done by the 2028 Olympics. So it's not such a tremendous eyesore there.
Yeah, and I think the mention was not just getting the deal done, but getting it done in a manner that could get allow the project to be finished by then. So I guess finished could mean either completing the construction or tearing it down, if that's the ultimate, outcome for this. But I do believe you're right that everyone would like to see it wrapped up before the 2028 Olympics for obvious reasons.
Certainly. And what about the overall picture here in downtown Los Angeles? These towers, of course, getting all the attention because of the craziness that went on there in recent months with the graffiti and people jumping off of it and so forth. But in downtown commercial real estate, a lot of vacancies there, a lot of see-through buildings, right? Can you give us an update on what's happening there now?
Yeah, there's not a lot to say about it. It's been rough. It continues rough. I think it will, that's going to go on for a while. I think there's a great hope in some offices being converted to residential. That remains to be seen. It's interesting, the market is, and there's bright spots in the overall market. Century City, as we've talked about, is doing quite well. And then, Los Angeles, California in general tends to move on. And right now, you see a lot of residential development going on under this builder's remedy, or at least attempting to go on and getting approvals based on the builder's remedy, where developers can go in and do a residential multifamily project. If a city hasn't met its state plan for housing, then they can skip the local approvals. We had a story today out of one of our reporters in Chicago, Emma Whalen, did a piece that's picking up in Illinois now, the builder's remedy concept. And right now they have it was kind of like in California where they had a kind of a toothless law on the books, but now they're going to try and pass some new laws to give it some authority. And so you can kind of see, even as California struggles in one area, they kind of set trends in others.
And we've been talking about office, but also retail in focus. We see the 99 cents only stores are closing, so that there's more retail space opening up here.
Yeah, 99 cents only. Now, I saw that in some parts of the country. I think it was the dollar stores, or perhaps it might have been another similar brand, retail brand, was scooping up some of those leases. So we'll see what happens in that regard. And I guess now you can put Red Lobster in that bunch too. I guess they just decided to close pretty suddenly a lot of restaurants, some more retail restaurant space coming online. So an interesting market out there.
Most definitely. We saw write up that Red Lobster promised consumers an endless supply of shrimp for $20, a gamble the struggling restaurant chain hoped would help pull it out of its pandemic doldrums, but that was not the case. So you mentioned that we got closures here, at least 5 locations in California, according to a LinkedIn post by a liquidation firm. So we are following that story as well. Anything else on your radar screen that affects the Southern California area with commercial real estate, of course, still a sore point for some banks and for the overall economy? You know, it was just a year ago that we had those bank failures, which included a lot of ties to commercial real estate. Anything else on the radar screen?
Well, you know, Frank, we just did a forum in New York, a real estate forum. And by the way, ours is set for September 12th in Los Angeles this year. So it's at the Beverly Wilshire. We'll expect you out there, Frank. But our New York forum, we had Howard Lutnick, who, a long-time executive, right now runs Cantor Fitzgerald and also JLL, the brokerage. He told our audience at the forum he expects in the next 2 years 500 to 1,000 smaller banks to go out of business. Wow. 500 to 1,000. So he was essentially saying, expect every week a couple of regional banks to go out. The good news, our banking system seems to be, since the Great Recession, kind of set up to at least absorb that. The bad news is that's not easy. You know, it's not going to be easy, and a lot of that is going to key off real estate that's going to need to be disposed of. So, all
right, we'll keep an open line to you, Jerry. Thank you very much for joining us live here. Jerry Sullivan, National Managing Editor of The Real Deal, the authoritative commercial real estate website. Jerry, thanks again for the update. Live with us here on Motec on Money on 790 KABC. Motec on Money continues here on 790 KABC. Good afternoon. Fasten your seatbelts for higher gas prices. Even though oil prices have been coming down lately, Californians still paying very high gas prices. In fact, the average price for regular gas in L.A., $5.24 a gallon. Premium now averaging $5.60. Diesel still up there at $5.32 a gallon on average. Looks like Californians can expect higher gas prices to the tune of about 50 cents a gallon higher over the next couple of years because of what's now being called a secret tax increase, according to one of the taxpayer advocates in Sacramento, and that is Republican State Senator Janet Wynn, who's joining us live here this afternoon. Senator, thank you very much for taking the call here today.
Thank you, Frank. Thank you for having me.
Take it from the top and tell us what consumers need to know about what's coming up here.
This is a tax on the tax. Right now, we're paying not just only state gas tax, but annual gas tax that will increase by July 1st. On top of that, we're paying this carbon tax, which is really trying to get everybody to EVs. This year, right now, that tax itself is 12 cents for gasoline per gallon. Next year, it's going to be 47 cents. By 2024, it'll be $1.80 just in the carbon tax, not including the state gas tax. So we're now looking at well over $2 compared to every other state in this country, and yet nobody's doing anything about it. And they said it quietly, secretly. No one saw it. It's in a report that's over 100 pages, and it's deep down, and no one's talking about these massive increases that they have predictions for. And you know what happens? When gas prices go up, diesel prices go up, everything goes up because whatever we buy, wherever we go, we need it to be delivered to the stores, to the restaurant, to the school, whatever it is, we will pay for the price. My constituent, my residents cannot afford this anymore. We can't even afford an EV, yet alone trying to pay for a gallon or two just to get to work or school or a doctor's appointment, grocery stores, you name it. It is outrageous, and we need to stop this.
On the air live with Republican State Senator Janet Wynn. Appreciate that, Senator, that you're bringing this to light. We had not heard about this until you brought it to the public's attention. And by the way, they're talking about regular gas going up about 50 cents. But it looks like diesel, which is the lifeblood of the economy, still would be even higher, right, with this tax scheme?
Oh, yeah, no. The carbon tax, right now, diesel is 14 cents a gallon. Next year, it's going to be 59 cents a gallon. By 2024, it's $2.35 a gallon. Ultimately,
so
as I said, we as Californians are the one who's going to pay for the price. Everything in California costs us a lot. Whether it's food, gas, you name it, housing, rent, everything in California costs us a lot. And we can't continue this. Enough is enough.
Well, you're speaking out about it. What can be done about this? We're already paying the highest gas taxes in the country. In fact, our gas is even higher than they're paying in Hawaii, which is in the middle of the Pacific Ocean. Yeah,
and they have to have everything imported to them, right? You know, I've introduced lots of legislation in the past and have continued to. My Republican Senate caucus has also continued to do so. Every time we've asked for a freeze in the tax increase, we've asked for a cap in the tax increase. We've asked for to do away these gas taxes on top of a tax on the tax. Every time we've done these legislation, the supermajority, the Democratic Party in Sacramento have killed every one of those bills. We need to tell the administration, everybody in California needs to sound the alarm and say, enough is enough, stop this. And get rid of these taxes, freeze them, delete them, you name it, you can do it. We need everybody to start calling your legislator and the governor's office.
Of course, inflation is running hot again because largely due to the rise in gas prices we've seen as oil has been moving up. And it looks like Sacramento's answer to higher gas prices is higher taxes. That's it. That's all it's about. It's tax more, spend more, and don't care for the people in California. Well, we appreciate your work on this and for bringing this to light because most people were not even aware of this until you took a closer look at it. This was contained in the California Air Resources Board report, a little-known state air quality regulator report that had these tax hikes contained in them. So we will follow this very closely with you, and we'll stay with you on what can be done about this as consumers are hit hard at the pump these days. Republican State Senator Janet Nguyen, thank you very much for joining us live here this afternoon. Thank you. This is Motac on Money on 790 KBC. We had a record-shattering day on Wall Street today with the tech names rallying. The NASDAQ settled at a record high, in case you hadn't heard, up 123 points, settling at 16,511. The Dow came in for a closing gain of 127. It settled at 39,558, and the S&P 500 up 25 at 5,247. The NASDAQ at a record high. The other major averages just below recent record highs. The price of gold moving higher today ahead of a big inflation report, which we'll be getting an hour ahead of the opening bell tomorrow morning. Gold up $2.40 at $2,362.30 an ounce. The yield in the 10-year note, which impacts the fixed-rate mortgage rates out there, is eased to 4.44%. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Motac on Money, 790 KBC.
Named one of the best personal finance podcasts, the Stacking Benjamin Show with Joe and his friends makes financial literacy fun.
Let's hear another success story. This one comes to us from Stacker Derek.
You guys are the best, and it's because of you I now understand retirement accounts, money in general, and how poorly the guests are treated when they show up. I really don't know where I would be without you. Thank you for $1,500, and here's to another $1,500 if Doug can survive that long without pay.
Find out more by searching the Stacking Benjamins podcast wherever you listen.